Last 2 days at the India Economic Conclave, and the fact that, the subject that we've chosen this time is navigating geoeconomics. And I was just thinking through it, that if there is one industry here in India which has actually managed to navigate everything, that's the retail investor, that's the mutual fund investor. 2,000 crore rupees worth of money coming in into SIPs daily. That's the number that we're talking about, and I still believe that we're just scratching the surface. There's so much more to go. Would you say that the real winner has been the SIP guy?
Yeah, of course. See, in any economy, you need to have vibrant financial market. You need to have vibrant capital market. It's not about mutual fund alone. The whole financial ecosystem should become so strong. At the end of the day, money being the raw material for every business needs. And the financialization of that mutual fund that has come, democratization mutual fund that has come in the country, most of the investors, the participation in the equity market, definitely you participate indirectly in India growth story. I think India growth story is not restricted to only certain segment of the people, certain segment of the savers, certain segment of the industries. It's actually that it has to get percolated to the every citizen of the country. That's something I take pride that mutual fund industry actually delivering their aspirations. Second is, when we used to actually build the business in the 90s, we never used to go beyond Mumbai and Delhi. We always thought that mutual fund means it has to be only Mumbai and top 8 cities. In fact, today, the mutual fund has presence in almost about all cities by way of pin code, at least some form or other, which again taking the Indian equity capital market to the every citizen of the country, which is actually is helping them participate in the India growth story, which is very good. And finally, when we come to the question of capital market development, most of the companies in India used to depend on debt borrowing. So you go to the banks, you actually borrow, your entire projects can be funded through the debt borrowing. And equity issuance for your business growth never used to be the case in the past because money were not available. Because the financial system of savings coming to the mutual fund, today money is also equally available, rather more money is available for equity funding, which has never been the case in the past. Every business person has to break his head, how to actually fund my growth, to build my business next level. In fact, the India aspiration of becoming 2047 third largest economy, I think that will become reality because today funding is available within India even for equity needs. Startup companies are getting funded by Indians. Otherwise, we should depend on overseas investors. So this, in my view, is a bigger achievement that has come thanks to the mutual fund industry. But having said this, we must also give credit for other financial savings coming into the capital market through the NPS. Today, NPS has become the largest size. In that, next to mutual fund, if you take the second largest industry is NPS. And within the NPS, they have a category which invests in equity up to 50%. They have a category which invests in up to 28%. They have a category which doesn't invest in equity at all, which essentially means your long-term pension planning can be done through the NPS. So that pie is also growing. People have actually understood I should not only protect my wealth, I should also, of course, build for my future needs. Therefore, this actually greater awareness that has come, definitely I think is a good change in the Indian capital market history. I think this is going to only stay for longer, and it can only do good for companies to fulfill their aspiration through good mix of equity funding as well as debt funding.
But Bala, at the helm of your mutual fund, we've had to navigate so much geoeconomics and so much geopolitics as well, pretty much on a daily basis. At least our lives begin with one man's tweets every morning and how markets will react to that across the world. How did you navigate through all of calendar 2025?
See, I think the geopolitical risk, in fact, it again, historically, it used to always part of our last slide. What are the risks that we see in every investment? That's why we actually finally will sum it up various risks associated to whatever assumptions we make. I think geopolitical risk has now become a new normal in the sense that I think the last few years, the way the global economy has gone through a geopolitical risk, despite that the whole disconnect or maybe got segregated between the geopolitical risk and then the economy. I think these two seem to have got segregated very beautifully. Therefore, this I think is risk will remain. But definitely from India point of view, the energy prices coming as a result of that is something has benefited big time. And then every country after the tariff or even post Russia, Ukraine war, I think every country started looking at inward and making it for yourself. In fact, And India probably would have got saved because we started visualizing, making it for India and then for the rest of the global. All such things which came from our Honorable Prime Minister when he got elected to the government in 2014, all such things actually brought inward getting worried about some of the geopolitical risk, and again segregated. Also been kind, and therefore some of us success we can't continue.
Bala, I would also credit that to the mutual fund industry. I would us. But at the same time, Bala, you know, while we rejoice in the fact that the Nifty around 40-50%, the mid and small caps have just not fired at all. The index. But why do you think such a disconnect has happened?
So I think in every market, there are good period, you see the broader market performing better. And when the economy actually is going faster, the economy also perform. Companies can only grow as growth, they can grow. Make an assumption, those growth also may go through some bit of period of volatility. I think what you have seen the last 1 year, small and mid cap, any exuberance that happened, the market is actually is always it curates themselves on its own. We don't need to do anything. We don't need to even think about the policy. It curates on its own, makes a course correction by themselves, and then by way of somebody's losses, somebody's gain. That's the way it happens. I think the current expectation that is there as far as the small and mid cap concern, what you mentioned about last 1 year negative return, if you look at 7-year period, I think it's far superior to Sensex companies. If you take a 10-year period, far superior to the Sensex or Nifty. Therefore, as you go down the market cap, your time period that you have to give for the companies to perform should be longer than some of the established companies. So that's the way market always behaves. But having said that, the market breadth and width, I have one number which is about, if you take about 10 years back, the representation of the large cap companies coming from Nifty 50, the overall composition of the market cap used to be somewhere around 75%. And today, the composition of the Nifty 50 companies and the overall composition of the component of the market cap is just about 62% today. That means where is the market cap has gone? Rest of the market cap has gone to the other than Nifty 50 companies, or maybe other than Sensex 30 company, which essentially means breadth and the width in the market has gone up. The number of companies who come to the capital market and raise capital completely fresh in the business. Number of companies who come and raise capital market money is about close to about 7 lakh crores. And they were never in the business, say 5 years back. They were never in the business about 10 years back. These are new companies, new age companies. They have discovered themselves a great business model that that exists, whether it is in the technology space, whether it is in the quick commerce space, whether it is in the financial services space. There are many companies using technology that discovered themselves. They have created a new market cap. So as a result of that, the number of companies that are added to the overall market cap also come new in the last only about 5-6 years. The last, of course, the list is the public sector companies. They always used to be the underdogs in the market. They used to have big companies. They can move out the economy, but they never used to get the recognition for a variety of reasons, including the inefficiency of capital usages. Maybe inefficiency of how the business are being taken to build the business. In fact, the last 5 years, the public sector companies, I always say the government of India has become more richer because of ownership that they have in most of the public sector companies. They not only become efficient, they also now become the driver of the economic growth and participate in the 2047 vision that government of
Promoters
India
are
is making
always
it.
rich.